Start recorder. Welcome, everybody. This is the Thursday evening, March 14th webinar. If you're here to learn about trading the futures markets using the Viper tools, you are absolutely in the right place. Today's topic is very timely. It is detailed mid-band trades. I know some of you are completely new to visiting us, and so, well, don't worry. This is, are we on screen one, or are we still in the disclaimer? Hold on a second, I'm loading this chart up here. Just give me a second here. Disclaimer still? Okay, I'm loading this chart. Let me get over to screen one. Once this chart loads, I'm going to go ahead and knock out the disclaimer. Stand by 1 second, please. Let's give it one more minute. Trying to get some more data on the chart. It's circling on me here. Almost done. One more second. There we go. Okay, good. All right. We're all set. Let's go ahead and knock out this disclaimer. All communications from Viper Trading Systems are for educational purposes only. Futures trading does involve risk, and there is a risk of loss. Nothing contained in this webinar or other webinars, including the live trading room, are to be construed as investment or trading advice. And, of course, everybody in here does know that you do trade at your own sole discretion. Alrighty then. Now, tonight's topic is detailed mid-band trades. And let me go over to, we're going to start off with the ES chart here. I know some of you are absolutely completely new. Some of you are here on free trial. Some of you are visiting on a, maybe an open house thing we had this weekend, or this week, the whole week actually. And so welcome to you, all of you. What we do here, in case you don't know, is we trade the futures markets intraday. We don't hold over night positions, so we're flat at the end of the trading session. We're connected to our broker with the data feed, NinjaTrader brokerage, and that's providing the data you see here. The E-mini S&P futures is ES. All the equity markets are on the June contract. By the way, for you new folks who are just sort of, learning, kicking the tires and what have you, hold on, let me show you the website, sort of the de facto website of futures, if you want to look at these various markets and try to understand a little bit what the volume is and what they do. It's called cmegroup.com. Let me show you the site. You'll want to bookmark this. Excuse me. This site has new markets that are coming out. Scroll down about halfway down the page, and you will see all the quotes. If you mouse over them, this is the equity products here. So this is the E-mini S&P futures, $50 per tick. There's 4 ticks per point, so each tick is worth $12.50. Are we on screen one yet? Yeah, we're on screen one. Checking audio, video. Everybody see the cmegroup.com website. Cursor moving. We all on the same page here? cmegroup.com. Cursor are making a circle. We're good? Audio good? Okay, cool. All right, so what you're going to find in the live trading room, for those of you that have been there or you're going to visit, we have the E-mini S&P futures contract in there. We also have the Russell futures, RTY, also on the June contract. Much like option contracts, they roll every quarter. You got March, June, was that September and December? So we just rolled to June, I think, last Friday. In the past, we've traded the NASDAQ futures. We don't anymore. That has an extraordinary amount of high volatility. What that means is that you can catch large runs and make money, but you might take a couple of whacks before you catch it. So we took that out of the room, and we had YM in there too, the E-mini Dow. We took that out as well. These are other instruments you can look at, and then this is the mid-cap 400 futures, the EMD contract. Those are all good. We honed in on ES and Russell and crude oil. Now over here is some of our other contracts that we trade, namely crude oil futures. That's $10 per tick of movement. We are on the April 2019 contract. You can see that here. We're going to look at those charts and how to trade it shortly. I know a lot of you like oil, so we'll spend some time on that tonight. And then, of course, the fourth chart in the room is the gold chart, which is right here. Also on the April contract. You'll find that the commodities, like the metals and the energy products up here, are kind of, on their own schedule. They don't follow the quarterly roll that the equity markets do. So you got to kind of stay on top of that. Ninja's pretty good. They'll send you notices when contracts roll. Now, what you're looking at here is, like I said, a 4-range chart with the data feed. If you just had the plain data feed here, you would simply just have bars going up and down. And what we have produced here at Viper is what's called indicators that run on the Ninja platform. Think of it this way. It would be similar to like if you have an Android phone, like a Samsung, or you have an Apple phone with iOS, and you have apps that run on it that do different things. It's very similar to that, only instead of the phone, you have Windows and you have NinjaTrader, which is the platform, right? And then our indicators run on top of it, like apps. And that's what you see on these charts. So the apps that we run, or indicator scripts, basically written in C#, are the background colors, the bar colors, the power meters, which are the various trends on the chart, the predictors, which are the ovals, that's the real-time support and resistance levels, paint in real time, a little button here to turn them on and off. And of course, the most prominent thing on here is the bands. And we're going to talk quite a bit about the bands, which are the thick middle band, aka midband, 4 bands above it, 1, 2, 3, 4, 4 bands below it. And of course, just bear with me, those of you that have been with us for a while, because it might be a little redundant for you. But so you have band 1, 2. Above band 2 is line 2, the thin red line. Okay. Then we have 5 and 6, middle band right here. Or 1, 2, 3, 4, 5, 6. Top of band 6 is line 6, the thin green line. And then you have 7 and 8. The outermost band is 8 up here. Now, when you're learning to trade futures, it's not unlike other markets you might have traded in the past. Like, say you might have, ventured into stock trading where you use charts. Some of you might have traded Forex in the past where you use charts. So it's very, very similar to that, only, these are futures markets. And so what happens is, before we get into discussing what a mid-band trade is, what I want to focus the first part of our discussion on is the fact that you have different types of market conditions. And that's what when we're getting ready to trade in the morning, or, if you're going to trade in the evening, overnight, European session, early morning, or Asian session, European session, you've got to know the market condition. So what do I mean by market condition? What does that mean? What is the condition of the market? Is that where we, take it out and like a leather chair and put some conditioning on it? What does the market condition mean? When somebody says to you, do you know what the current market condition is? You could say, well, it looks like it's pretty busy, I guess. I don't know. What does that mean? Market condition. So we're all on the same page here before we even get started. Right. Another word for it is the market direction. So whenever you look to trade any market, whatever futures contract you're looking at here, you have to know whether the market is going up, down, or sideways. Let's look at some market conditions together and see if we can sort of figure out whether a market is going up, down, or sideways. Okay? How about the ES market right in here, where I got my cursor? Here's what we're going to do. I want to do just a couple of 3, 4 of these, so we all get on the same page. Okay, so when I ask this, you're going to have 5 seconds to type in U for up, D for down, or S for sideways. We're going to look at various market conditions together. Okay? Okay, so how about here? How about from this line here to this line right here? 5 seconds on the clock. U, D, or S? Up, down, or sideways? In here. So up market, down market, or sideways. 4 seconds left. Type in a U. That's what we're going to do. We're going to do some exercises together. Make sure your cranium's paying attention here. You've had your shot of espresso. You're still awake. Up, down, or sideways between the lines. U, D, or S. 3 seconds. Type in a letter. Cast your vote. 2 seconds. 1 second. Up, down, or sideways. U for up, D for down, S for sideways. All right, it's a little confusing. I'm not going to throw softballs out all night to you, or you can just tee them up and hit them over the fence. I'm going to give you some tough ones here, okay? These markets sometimes get really choppy, and you got to know what to do, right? This is really important, okay? Let me blow this up and see if I can answer it this way. I think you could make the case that in this one, the answer is really not that clear. Now, what do I mean by that? Well, you got a lot going on here, right? You could make the case that to the left, you were coming off of somewhat of a downtrend. So the left part of this, you could say, was in a downtrend, yes? Right here. It was the tail end of a downtrend, right? Okay. And then we started to get sort of a higher high and higher low thing, but it wasn't really breaking up or down in this area right here. Right? So you have a mixed bag of tricks here, right? This was the tail end of the down move. We kind of went sideways a little bit, and then she started to make more of sort of an upward move. So I guess you could say it was USD. Huh. Or no, DSU. Down, sideways to up. But overall, the whole area, it was pretty sideways. Now, why is this important? Here's why. And this is what I'm leading up to here so that we all get on the same page, is that if you're going to take trades at the mid-band, in fact, this is so important, this is one of the first things I'm going to write down here. In order to take mid-band trades, and I'll explain exactly what that is in a minute. If you're not familiar with what I'm talking about, mid-band trades, just hang tight for a second, okay? Mid-band trades, more or less, need to be taken when the market is trending. Okay? When the market is trending. So when a market is trending, let's blow this up. I'm going to scooch this line over for just a minute here and get this arrow out of the way, and let's look at examples of a short mid-band trade to the downside. So when markets are trending down, we have this notion of a thrust, which is the push in the trend direction, and when the trend is down, the push is down. Yes, this is the push in the trend direction. And so since we are retracement traders, we have to wait patiently for pullbacks or retracements. Now here you can see that this is the mid-band right here, this thick line right here. So when we say mid-band trade, we're talking about a retracement. It comes up into this area right here. Now I'm going to really blow this up because the title of tonight's webinar is Detailed Mid-Band Trades. So we're going to start the detail part right now. And this is where the juice comes in. Okay? When I say juice, the magic sauce, the magic's whatever you want to call it, you know, it's a special sauce on your Big Mac. Nobody kind of knows how it works. There's part art, part science, but it's possible to master it. And what I mean specifically is this. So there's different types of trades that we like to take, but tonight we're going to focus on the mid-band trade. And by definition, a mid-band trade has to occur in this area right here. Within this band on the short side to the underside, bars can hit the band itself like such, in this little wick doji here, or they can come slightly above it into this band right here. If a market is in this area, on the band, or slightly under the band, it is considered to be a mid-band trade. Okay? That is the definition of a mid-band trade. Now, how do you take those? There are several ways. Okay? I'm going to show a couple of them. In fact, I'll continue to show them as we move forward, and then as you get better with them, I'm going to ask questions around whether you can see them yourself. We're not there just yet. One of the ways we like to do it is with a trend line that's broken. Here's an example here. Gary draws these in the room quite frequently on various instruments. In this case, in this particular example, when that line is broken and closes, you get a short fill, a market order on the close of that bar right there. Another way to do it is to put a region box here. Using the object trader tool, you would simply engulf the candles like such. And when it closes outside, you would also be filled on a market order short on the close of this bar right here. Now, I'm not going to talk about the mechanics of managing the trade just yet. That'll come later. The actual mechanics about how you get filled, where you put your targets, how you scalp it, where the initial stop goes, going to break even, and all manner of those things. We'll talk about that in a little bit. I don't want to money this down just yet. Now, you can see that the market moved in your favor here, and you may or may have not gotten off a 6 or 8 tick scalp. It's hard to say. Let's take a look at how far it went. Did you get a scalp off? Let's say you were filled short at 54 1/4, and it got all the way to 52.50. If you had a 6 tick scalp target, it probably got you right in here. Scalp target is where we had a discussion about this a little bit earlier, where you look to capitalize on short-term movement in your direction by putting a quick target here and then quickly getting the stop down. Now you got a second chance to enter right here. With this kiss and roll, we call that, in the case of a short, we're looking for a kiss and roll off the mid-band. Another box would have looked like this. And this short would have been filled on the close of this bar right here. Market order. Now, in this particular, these two boxes, when you enable Object Trader, you enable short only in a downtrend. Short only on a downtrend. So you're filled short on this bar right here. Put your scalp targets in, put your runners in, trail the stop, and this one turned out pretty good. This was actually a very good trade right here. Okay? Now, I'm going to show an example of an uptrend mid-band trade. Okay? Let me come over here. All right. In fact, I'll tell you what I'm going to do. This is going to be our first exercise in this area. This would have been, I think, yesterday. I don't think this was this might have been this morning. I'm going to advance a chart, reconstructing real time around 8:30, 9 o'clock Pacific time. And when you think you see a mid-band trade, you type in the letter M. Okay? Based on the definition of what you know. Now, we've only been in here about 20 minutes. So it might be a lot to ask. But I'll try to make it easier for you because you're going to be looking for long mid-band trades. So you don't have to guess the direction. You just have to identify when it occurs by typing in M for mid-band. Are you ready? Here we go. I know this is all new for some of you, so it might be hard to see the first few times. That's okay. That's how you learn, right? Ready? Here we go. Okay, so this is 8:33 a.m. Pacific. Please, 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 a million times, please do not type in mid-band here. This is the thrust, remember? Thrust up. So now we're looking for long trades, yes? Here we go. 8:38. 843. Typing in an M when you think you see a mid-band trade. 852 coming up on 9 a.m. Pacific. 8:55. 9 o'clock. 9:02. Okay, advancing it further. 9:03 on this particular morning on the E-mini S&P futures. 9:04. And these bars are now at 9:05 Pacific. There's 9:06. Okay, so we're coming up on after 9 o'clock here. 9:09. 9:10. All right, I'm going to stop it right there. Now, what was our definition of a mid-band trade? Does anybody remember? Where do the bars need to be located? Let me help you out. We'll do a reminder. So, like I said, some of you might be just seeing this for the first time, so it's all new to you. That's cool. They have to be in this area right here. So one of the things that we have to do is train our mind's eye to when a market, let me just say it this way. When a market is hovering up here after a thrust in a given direction, up, background turns green, bars are predominantly blue, you have a green stealth line here, mid-band and all the bands are stair-stepping up, so this is a long condition. We're looking to buy a retracement into support. So when these bars happen up here, our eyes are looking where? When the bars are forming up here, are we looking at here? Can we take a trade up here? Is there any trades to be taken here? Up here, after this push. Was this where we're thinking about? Let's say we didn't take anything over here. We're not in a trade. We're looking to get in. Your eyes are down here. Right? In all due respect, if you're not in a trade taking profits and trailing stops up here, I mean, the only reason you really care about that is to establish where a swing is located, right? So that when you take a trade, you know where you want it to go. That's the only relevance it has at this point, yes? So clearly a swing's being established at 62. Now, you begin to get your retracement on these bars right here. See as they pull back? 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 Now, you tell me when these bars fall into the area to now take a mid-band trade. How about these two? Yes? Okay, there's a third one. This was remember our sweet spot for a mid-band trade, right? It was here, just to be clear, on the mid-band itself, and underneath it in this band right here. Have these bars located themselves? Well, we're not worried about a double top. We don't care about this. That's what I'm trying to say. We don't, aside from, as I pointed out, aside from the fact that we established a swing at 62, which would be our target on a long trade, we're not paying attention to that. Unless you're in a trade from down here. That's what I was trying to say. If you got long from down here and you're taking profits up here and trailing a stop, then this is relevant to you. If you're not in the trade, this is irrelevant to you, other than the swing. So here we have 3 bars in the sweet spot. Now, if we're going to take this trade, there are a number of different ways to do it, and I'm going to outline them all. One of them is the retracement line, like we discussed before. You simply go over the tops of the bars forming the retracement itself, like such. A close above that would get you in. You take the wicks and the bottoms of the candles and you engulf them with a region box. Hence the name region box in the live trading room. Gary, sometimes if there's time to do it, he'll actually show a box. So when somebody says something like, and the bars are up here, and this is really important if you're trading ES or oil or whatever, and the bars are at 62, and you hear somebody in the room say something like, you know, if we get a pullback anywhere around the mid-band, around 56 area, now, and this is an important caveat, and we get a bounce, okay, and we get a bounce, I would look to take a long trade there. So those words translate into this. These bars right here qualify for that, so you engulf it. Now, are there other ways to get in? Yes, I will tell you what they are. Can you put a limit buy order right here and get filled right at 56 1/4? Yes. The risk of that, is that a better fill than getting filled on the outside of the box? Yes. Can you have a tighter stop just underneath the midband? Yes. Is there a higher risk of a stop out in the event that it never goes up? Yes. Okay. Can you put a limit order right here so that when the box gets, when it goes through the top of the box, you right click, put a limit order on there? We don't recommend that, but is that a way to get in? Yes. Now, here again, the plus side of that is you get a tighter stop. The plus side of that is, you know, you might get a better fill. The downside of that is it bips up here by a candle, fills you, and then stops you out. Depending on the instrument, now, ES is a very, most days, not every day, but most days is a very calm instrument. It doesn't move very fast. Okay, these bars take plenty of time to form. So let me level set some expectation in regards to this area. Here you're pulling back at 9 o'clock, and this bar over here formed at 9:05. These 5 bars took 5 minutes. You know how long 5 minutes in trading is? That's an eternity, right? Here you're retracing at 9 o'clock, and here is 9:05. Can you hold on one second? Sorry about that. Somebody picking their kids up out there. Yeah, so what I'm trying to tell you is that a lot of times ES will respect these support levels. They'll respect resistance levels. It'll be plenty of time to get in. It's pretty rare that they shotgun all over the place. There's some news, of course they would, but it doesn't happen very often. That's why we like ES. So in the case of the region box and the limit order and the retracement line approach, all 3 entries are filled long on this bar right here. On the close of it, what physically happens is object trader or limit order or retracement line fire a market order here on however many contracts you have stipulated. If it's 1, it puts 1 in, 2, 3, etc. Okay? Now the nice thing about doing object trader fills is that it's a semi-automated system, so it'll put your targets in, it'll put your stops, and it'll manage the trail stops. It'll do all that automatically. Once this region box is set, you're good to go. Okay? Now if you put a buy limit here or a buy limit here, and you put 2 lot or 3 lot on, you're going to have to put your targets in manually, and then you're going to have to, you know, whatever your stops were, you're going to have to manage that. You have to drag it up. You're going to have to put it all over the place, and so I mean, there's pluses and minuses to that. You're going to have to take your instrument and experiment with the different entry types and see what works best for you. But the point I'm trying to make here is that this collection of 1, 2, 3, 4, 5, 6 yellow bars is the epitome and definition of a good, solid mid-band trade. Does everybody see that? Okay, good. All right, let's move on to another one. Are you ready? Let's do another one together. And I'm going to do another long one for you. Okay? If everybody sees this, if there's no questions, I'm going to clean off the chart. I don't see any questions. Okay, I'm going to do right-click, drawing tools, remove all. Is that cool? I don't see any questions. Going once, going twice. Okay, delete all drawing objects. Clean chart. All right, here we go. Okay, now this is coming off that other trade, so that other trade's done. Let's pretend that other trade is finished, and now we're going to look for a new long trade. You tell me when you type in the M when you think a mid-band trade is setting up. Ready? Here we go. Now we're at 9:15 this particular morning. 9:16. Okay, our eyes are focused on the right. This is over here. This is all done. Okay, that's not relative to our exercise here. from here to the right. Let me put a demarcation line where you're looking to the right of here when looking for the next trade. No, there's no M here yet. Hold on. Continuing on, 9:30. 9:32. 9:34. 9:33. Coming up on 9:34. This is pretty fast. I mean, you know, I'm advancing what normally would be a minute in like, 10 seconds. So it's going like probably 50 times what the actual market would be doing at this point. But you're right at 9:33 a.m. Pacific time. All right, I'm going to stop it there. Now, looking for a number. How many mid-band trades are on this chart to the right of the vertical line? Just type in a number. How many mid-band trades are on this chart to the right of the vertical line? Type in a number now. 5 seconds on the clock. 10? 7? 4 seconds. How many mid-band trades are on this chart by definition of a mid-band trade to the right of the vertical line? 2 seconds. Just, you don't have to think about it. Just look at it. Boop, hit a number. 6, 8, 12. How many? 1 second. Time's almost up. See a lot of numbers coming in. All right. Okay. Time's up. Well, let's look at the potential setups here to see if what we got right, and then we'll circle back and give you the correct answer. Do these bars right here meet the definition of a mid-band trade, yes or no? Those, I don't know. Probably you may have included the top that doji bar right there, or something like that. What do you mean no? Yes. How could you type in a no? Unless you came in late. I mean, it's possible you came in late and didn't hear what the definition was. I've drawn it 3 times. I'll draw it again. If the bars are located here, in anywhere inside of this rectangle, anywhere inside of the rectangle, it is considered a mid-band trade. All right, let's do a simple exercise. Are these bars considered a mid-band trade? Yes or no? Okay, how about these bars? How about these bars? So now that you look back on it, hindsight's 20/20, yes. Mid-band trade number 1 was right here, right? And a lot of you got that. There's mid-band trade number 1. Those bars absolutely meet the definition inside the rectangle right there. Now, where you got filled and how you managed the trade is irrelevant. Was it a trade or not? Yes. Was this mid-band number 2 right here? Did this fall in the criteria for a mid-band trade? Yes. The correct answer was 2. There were 2 mid-band trades here. Now, some of you said 3, some of you said 1, and some of you said 0. Now that you look back on it, is it clear? Well, yeah, whether you take them or not, that's not the question, right? Okay, how about here? Let me just clear something up. How about these? Is that a mid-band trade with those 3 bars, yes or no? Kind of a gray area, huh? Isn't it sitting right on the top of band number 5? By the technical definition of how we are trying to frame what a mid-band trade really is, the technical answer would be no. And the reason I'm saying that is that these bars are opening and closing inside of the rectangle, so what we're looking at here is band 4, mid-band, and band 5. So just so we're all on the same page. Yeah, I can see that some of you, that's a little confusing. I'm trying to stay toe the line on technical definitions here so that we're all on the same page. Could that turn out to be a good trade on a minimum criteria on a huge up move? Yeah. In the chop sideways? Probably not. These bars are clearly opening and closing inside of the band that defines it as a mid-band. And so are these. All opening and closing right here. So everybody's getting it. Good. Are you starting to see it? Okay, let's do tell you what we're gonna do. Let's do one or two more ESs and then I'm gonna flip to oil. Okay? I'm gonna lob some tough ones at you. Are you ready for the tough ones? Huh? Bring it on. Are you ready for the tough ones? All right, here we go. We'll do one more tough one, and then I'm going to put oil up. Ready? Okay. Here we go. Okay, I'm going to clean the chart off. Everybody says the drawing tools, remove drawing objects, all, select all, yes. To the right of the vertical line, starting right now, and we're going to advance the market forward. And when you think you see mid-band trades, you type in an M. Here we go. To the right of here. I like doing these exercises because it's easy to look at a static chart, but what happens is when you're sitting there with a live chart with live data coming at you, if you're not used to seeing bars move around, it can mess with your head a little bit. You've got to practice kind of seeing them coming at you and then sort of deciding what to do. Now, we're not going to talk about how you got filled and how you manage it. I'm just all you do is type in an M when you think you see a mid-band trade. Here we go. This was 10:20 that same morning on ES. 10:20 a.m. Pacific. Let's convert that to your local time zone. Moving forward. All right, so I'm going to stop it right there. This was a tough one. You're going to get ones like this, okay? They're not all going to be like perfect teed up piece of cake, look, see the thing, put the box, and off you go. It's not going to work like that in the real world, okay? So based on our definition from before, do these bars right here qualify as a mid-band trade by definition, yes or no? This is like our other ones that were on the borderline. What was our technical definition? No. Some of you typed in M's here. That was not correct. That's not a mid-band trade. How about these bars right here? Let me show a couple of them. How about these ones right here? These might meet the criteria. Yes. Are they in our rectangle? Yes. Would you have been filled long if you drew the box like I showed it? Probably not. Now, how about these bars right here? Does that mean meet the definition of a midband? That could be another type of trade. Okay, we have other. The midband is not the only repertoire. We don't have just a hammer in our toolbox. We got other tools. We got a screwdriver and a monkey wrench and all kind of other tools in our box. We're talking today strictly about midbands only. No. The bars have to open and close within this rectangle, and they don't. So this is a negatory. This is a negatory. This is a yes. Now, last question. How about these bars right here? Do they meet the definition of a midband trade? Yes or no? Right there. Those 3 bars. I'll help you out. Just kind of move that guy over there a little bit. Yes. I mean, they are the living definition of it in the fact that they are actually physically sitting on the midband itself. So this was a no, a yes, a no, and a yes. All right, everybody doing pretty good here. Now let's get crude oil down here. Now crude oil is a little tougher in the fact that it moves faster. Oil is such. If you looked at crude oil, just give me a second. I'll put this get the chart over here. Give me 1 second, please. I know a lot of you trade crude. I want to get through some crude trades today. First, I got to clean it up. Drawing tools, remove objects, select all. There we go. That's a clean chart. Let's look at today. Okay, you ready for some tough oil questions? Just a quick show of hands. How many of you trade crude? Any crude CL crude oil traders in here? Show of hands. Yes. Here. Me. No. Wow. Lot. Cool. Yeah. If you know what you're doing on oil, you can make a lot of money. You got to be careful. All right. Now I'm going to help you out here a little bit, and I could lob something out that would mess with you, but I'm not going to do it. Let me ask you a question, and here is the question. Is there ever a time in a market, any market, gold, oil, whatever, where you might not want to take midband trades? Are there ever conditions such that it's not conducive? In other words, are there any cases where you could make the case that a midband trade is probably not a good idea? Good. Sideways, yellow, crazy. Tight bound ranges. Ranges right around the midband. Choppy. Sideways market. How about this area right here? Do you think this area is a good candidate to take midbands? In fact, this is the live market right now. This is the real data coming in. It's right at 58, 56. How about right now? Is this a good, is this good, clean midband setups here? Is there a lot of meat on the bone when you get filled? If you put a midband box like right here and you get filled, on this candle or that candle, you got a lot of meat on the bone for it to run here. Is this a good looking chart for some midbands? What do you think? You got support kind of right down in here, and you got resistance, more or less up in this area right here. Midband sitting right there. Sideways not good. Not a lot of meat on the bone. Not a good idea to trade this chop. So that's correct. If you have a market that is very sideways and choppy, here's another example of one over here. And the support level is not clean and clear. The resistance level is, if you're going to get long, for instance, is very close to the midband. So by the time you could put a box on it and get filled, there's no place for it to go. I don't know that I'd even put limit orders with a tight stop and a target. You could. Let's look at the size of this range, each one of these. Our definition is like 25 tick minimum. You support at 47 and resistance at 61. Total range is less than 20 ticks. This is a big negatory right here. Over here, support at 45 and resistance at 60, 61. What's that? 15, 16 ticks? This is a negatory here. Everybody sees what I'm talking about right here. If you put here, so let me be clear. Okay, so you put a mid-band box in here somewhere, like that, maybe, whatever. By the time you're filled, you can't even. You get slippage and commission. There's no money. There's no money to make here. There's nothing in here. No mid-band trades. Okay, just so everybody's clear. There are conditions where you should not be taking mid-band trades, and you have to look at the size of the range. It has to be a minimum of 20 to 25 ticks in size to allow you to have sufficient distance to get filled, have slippage and commission, and get your profit targets, at least a scalp. Okay? Let's go back and look at some other oil conditions and see if we can find a condition that's conducive to mid-bands. Stand by. All right, I'm going to do this exercise on oil, starting right now. We're going to advance the chart. I'm going to put a demarcation of a vertical line at 9:15. I believe this was this morning after we closed the room. And here again, you're going to be looking for mid-band trade setups signified by typing in an M. I'm going to advance the oil chart. Everybody ready? Here we go. Now, I'll give you a bonus point if you can say the direction. So, you could type in. So if it's a mid-band trade and you see it and you're ready to take it with a box or however you hook or by crook, you're going to get in. And if you think it's a long, you would type in an ML. Okay. If it's mid-band short, you would type in an MS. So mid-band short. Okay. All right. Here we go. To the right of the vertical line, crude oil starting at 9:15 a.m. Pacific time. Here we go. The mid-band is right here, Louis. It's that line right there. Everybody see it? Okay, good. Here we go. 10:30 a.m. Blow up the chart, make the bars a little bit bigger here. Make the bars super duper big. Now we're at 10:38 a.m. Pacific on crude. Looking for mid-band trade setups. Okay, we're 10:49. Between here and here was actually 15 minutes. So get the bars just a scotch bigger. Okay, now you're at 10:45 a.m. Pacific time here in sunny California. 10:47. 10:49 coming up on 11 a.m. Okay, 10:56. Here comes 11 o'clock. Okay, there's 11:07. 11:20. 11:23. Coming up on 11:30. 11:45. 11:48. Coming up on noon. 12:42. Coming up on the close soon. Close at 1:15. By the way, you want to be out of most positions at the close, 1 o'clock Pacific. Okay, now you're getting into after-hour session. Right now we're coming up on the present time. Close of the market after hours, going into the Asian session. Okay, I'm going to stop it right there. Now that you look at it, everybody, How many long trades are on the chart? Now that you see the whole thing, not coming at you in real time. Now you get the whole picture. So this, of course, would be after the fact. You know, this is kind of armchair quarterback because you can just look at the whole thing and see it. You know, that's why we do the exercise of the moving bars, because you don't see what the right hand side. You only see the left hand side as it's coming at you. So now that you see the whole picture, how many long trades are here? By definition of the mid-band. So it would have been it would have been MLs. If you were typing an M, it would have been all MLs. Yes? Well, let's go back and look. Now, over here is our vertical line. This is where we began the exercise. Let's go back and look. Here we can see that we went into an upward thrust. So the first thing that we notice in our chart is that we have a green background. The mid-band and all the middle band and all the bands are stair-stepping up. We have a green stealth. Bars are predominantly blue. An uptrend means we're looking for longs. So that was your first understanding of what you were going to do. You were looking for long trades on a retracement, which occurred right here. Now that you're looking back and you can see it clearly, was this your first mid-band long trade here? Is that mid-band long trade number one? Yes or no? What do you think now? Now you look at it. Yes. There's mid-band long trade number one. That would have been your first ML. You would have typed in ML right as those bars formed. You would have been filled in the close of that bar. Now I gotta put a caveat in here, okay? Some of you typed in M when these bars form. Now that is not correct. I just want to be clear about this, okay? We're trying to be very detailed and technical in understanding how we actually see and take these trades. This is too late. So how do you fix that? So here's what you do. You've got to train your eyes to focus in on this area right here. This is the sweet spot where you get in. You don't want to get in these bars up here, because by the time you get in up here, people are already getting out of long trades from down here and over here, and they're scalp trades. They're taking profits. They're taking profits while you're getting in. You don't want to do that. You got to focus your eyes right here, on and around the mid-band. This is the sweet spot. When these bars start forming right in this area, your trader's spidey sense got to perk up and say, whoa, 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 wait, oh. Background's green, stair-stepping up, blue bars sitting on the mid-band. We're looking for a long trade here. I'm going to use my tools. I'm going to get in. Now, moving forward. How about these bars right here? Is this a mid-band trade, yes or no? By definition, by our current definition that we've used throughout the course of this entire webinar, is that a mid-band long trade, yes or no? I mean, you should look at that. I mean, we're coming up on an hour and we've shown like, a dozen of these things. It should be clear now what is and isn't. Okay. How about these? How about all these bars? How about these bars right here? Those bars. Are those bars? Do they meet the criteria by definition? These and these. Okay. All right. Okay. So how about these ones? How about these bars? Right here. These bars. So on the chart, we have 1. We see that. Negatory on the 2. This is a no-no. Everybody should have put no on that. Do the bars open and close inside of the rectangle defined as the mid-band entry? No. Neither do these. This was a negatory 2. Box number 2 over here, box number 3 actually in our little exercise, is a negatory. Nope. This was a yes. So if you said yes, you were correct. This was, and the correct answer for the question on the chart, how many mid-band long trades set up, was 2. Yes, if you put in 2, you were correct. This is mid-band box number 2. Yeah, by the open and close rule. That's our rule. Here's the thing. Look, it's like anything in life, right? I mean, you can slice and dice and have as much gray area as you want, right? I mean, but at some point, some things got to be black and white, right and wrong, right? Black and white, white and wrong. I mean, you can't, if you're going to live in this gray area, trust me, you're going to have you're going to have a tough time trading, okay? Because you're going to be justifying getting in at all manner of funky points, and you're getting stopped out, not hitting your scalp targets because you're getting in late, taking trades, at the tops of ranges. It's not a recipe for long-term, trading success. You've got to have rules. You got to understand what those rules are and live and trade by them. That's how you can trade for the next 5 or 10 years and make good money. Okay? Everybody did pretty good. I'll give everybody a gold star. I'm going to go ahead and stop the recorder. Any final questions?